you've been liking IT for a long time. You've been overweight in some of the large IT stocks as well. You've seen a bit of consolidation as well in the IT space. Some of the mid-cap stocks are getting bought over by large companies. HCL bought over Geometry. A couple of other M&A deals have happened. You still hold the positive view on Indian IT stocks?
Yes. By the way, that's one reason, because consolidation, of course, means that they can hold their margins.
Sure.
They can keep margins or maybe even raise margins with consolidation. So the strong are getting stronger, and that is a very good sign.
What's your view on the banking space in India? Because there's a lot of noise about NPA levels at very high levels. A lot of corporate balances are still stressed. What's the general sense of the banking space, especially the private banks, because they've corrected sharply in the last couple of months?
Yeah.
But it looks attractive at this price?
Well, if you look at India generally, the number of people that are not in the banking system to begin with provides an incredible opportunity for every bank who are able to innovate and reach these people. And with the identity card program, bringing people into bank accounting and generally enabling them to start saving is an incredible potential for Indian banking. So I look at the banking system in India as a potential growth area. Now, of course, you're going to have intermittent problems,
sure.
Changes in interest rates, problems with NPLs, et cetera, from one bank to another. But generally speaking, managements in Indian banks are very good.
Okay.
Generally speaking, there are exceptions, of course.
Sure.
And for that reason, I think it's a sector you've got to be exposed to.
But given that there are new bank licenses being issued, payment banks are coming up, will they be disruptors to the legacy banks, or you think there is so much of room and so much of scope that every bank or the large banks are likely to survive and grow?
There's lots of scope for growth, and the innovations, internet banking and that sort of thing, of course, are challenging the traditional banks. But don't forget, the traditional banks are going to start adopting internet banking. This is happening, by the way, globally, not only in banking, but in retailing and many other areas, where you had the disruptive conditions of new entries into inexperienced people who really didn't know retailing, who didn't know banking, but got into this because of the internet expertise. Now, the traditional players, the banks, and the traditional retailers and so forth, are getting into this space and are realizing, hey, this is one additional distribution channel for us. Why don't we adopt this? Maybe even buy up some of these companies and bring it into our own system. So I think that's going to be a great opportunity for the banks.
The other big disruptor is likely to be in the telecom space. We're going to hear a very large player coming in with 4G services. What's been your experience in other markets when a large player comes in, turns out to be a disruptor? Is this a time to avoid other incumbents like Bhartis and Ideas of the world in India? Or do you think there is enough room even for them to grow, and the disruptor will not be a big challenge for them to put out the earnings?
You must remember, in India in particular, but in many other countries, the local regulatory environment favors the incumbents, the people that are in place already. So it's a big challenge for somebody to come in and go against those incumbents, unless they have a very, very innovative system and some benefit in terms of technology. So I would say the incumbents are not going to be that threatened by new entries. The real problem is space. Space on the spectrum.
On the spectrum, sure.
That is a real challenge, and that's a global one, by the way, because people are demanding more and more space, faster entry and exit, that sort of thing.
So you have exposure into any of the telecom stocks in India, or?
Yes, we have had. We've looked at some private equity opportunities there.
The other sector which you've been very bullish on is the consumer staples and consumer space. Again, there you've seen some bit of disruption coming in from some unlisted players, like Patanjali, hitting some of the margins for some of the listed names. Generally, what's the sense in the consumer space, and the fact that now RBI is in a rate cut cycle? How much you think there is more potential for consumer staples to grow in India?
Well, the interesting thing about consumer staples, and that's true globally, is that the internet innovations have brought these products to people who otherwise would not have had that exposure. So you're getting a brand new appetite for these products, which helps the incumbents in many ways if they're able to meet the challenge. In other words, if they're able to innovate their distribution. So you're finding as a result of what's happening with internet shopping, distribution systems are improving very rapidly. And that means your audience, your market size is expanding at a pretty rapid rate. So that's the reason why we're very interested in that space.
So what is currently underweight for you in India? I mean, what are the sectors which you think still should be avoided, at least in the near term?
Very difficult to identify because we're stock pickers. We tend to pick the best of different sectors. But I would say probably in the utility area we're underweight.
Still underweight?
Because there are some changes taking place which are difficult to predict. So we're watching that carefully, but that would be the area that we're careful on.
Broadly, what's the view on crude? Because that's again going to be a big reason for India to outperform or underperform. We've seen a bit of pullback on the crude prices, but still stagnant range. What's your sense for the crude, at least for the next 12 months?
We're seeing probably an increase in crude prices, but over 60, very unlikely. Over 60, 70, very unlikely in the near term. And of course, this is great news for the likes of Reliance and people who are doing the refining. And if you look at exports from India, I think the top export now is refined products. So this is very good news for India in many directions, not only because of the processing capabilities, but also because power is needed. And if you have lower power costs, it's very good for the country.
But looks like sub 30, sub 25. Is it a possibility, or is it going to be range between $30 and $60?
You mean the
crude price?
The crude price. I think you're going to see continuing strengthening as we go forward, but it's not going to be dramatic. You're not going to see 100 in the near term. We'd be lucky to get to 60. If
India is going to see a declining rate cycle, how are you looking to play the rate sensitive sector stocks in India?
Well, that's very, very critical because India, if you're looking at emerging markets generally, India rates are relatively high, and that has inhibited rapid growth, more rapid growth. Well, India is growing at a good pace, but it has inhibited the economy. So this effort to lower rates is very good news for everybody. And of course, those who are, heavily indebted, those are the ones that we're going to be benefiting the most.
Will real estate as a sector benefit in India if the rates continue to go down? There is a regulator now in place as well, and that's a sector which has completely been ignored by most of the global investors. Is this a time now to look at real estate space in India?
Exactly. What you've seen in India is that at the higher level, the expensive apartments, expensive houses, they have been doing fairly well because the wealthy are wealthy and they have the money to spend. But at the middle and lower level, there's a need for much more. And there's a great opportunity there with the right model. The question is, how do you get the right model? And that means finding the property, the land, in the right place. I mean, you see that in India as well. I mean, the property prices in Shenzhen and Shanghai are going up, whereas in some of the other inland cities, they're going down. So it's all about location, as you know, with real estate. But that's a great opportunity. The problem that you have in India is regulatory. There has to be much better regulation of building standards, and the relationship between the buyer and the seller has to be much better regulated, because you've had a lot of fraudulent practices, which gives a bad name to the industry.
What's the broad sense on the Indian pharma space? Is this good opportunity to enter?
Well, as you know, globally, the pharma space is in bad shape in terms of reputation. The reputation of pharma companies has been really downgraded. But that doesn't mean that people are using less. As you know, one of the top exports from India are pharmaceutical products. And I don't see that changing. I think that will continue. Demand is not only in the U.S., but all over the world. So I think it's a good growth area. Again, some of the prices of pharma companies got a little bit out of the norm of what they should be, and with the decline in prices, there will be opportunities.
Have you looked at? Do you have exposure to any of the pharma names in India?
Oh yes, we've had a number of investments.
So still,
and we're still investing.
Pharma is a space will do well because they've been consistently doing well, but now there are question marks about valuations, about growth prospects, about USFDA issues.
Yeah, a lot of the prices ran away and got a little bit too high. With the correction, there'll be opportunities again.
Sure. If I want to ask you a bit macro and about India's growth prospects, what sort of growth you see over the next couple of years? And there is this big dialogue about can India grow faster than China in the next couple of years from now. You think that's a reality, that India can grow faster than China, maybe say in the next couple of years from now?
Yes, I think India will grow faster than China. Okay. For a number of reasons. First of all, you're starting from a lower base. Yeah. You see, in China, 10% in 2010 was a lot less than 7% in last year. Sure. Because the base has gotten much bigger. And in the case of India, you have a much smaller base than China. So the growth prospects are much, much greater. And I would not be surprised to see India growing at 8, 9, even 10%, provided these reforms are put in place. Could be very exciting.
So what are the key things you'll be watching out for in terms of reforms? I know we spoke about GST and bankruptcy code, but beyond that, what are the few things that you'll be watching out for as key triggers for India to continue to outperform?
Progress on infrastructure. Okay. And that means high-speed rail connecting the states all over India. It means roads, highways, toll roads, that sort of thing. There's a lot more happening, but I think that has to be accelerated. Okay. So you see more and more of that connecting the states all over India. And I think an open skies policy would be very good, because you need the airports now have to be upgraded, and there has to be much more in terms of facilities for aircraft. So all of this, provides the foundation for a faster growing economy.
So you said you do expect 20 to 30% returns from India over the next 12 to 18 months. But what about downside? We saw a low of 6,800 on the Nifty. Is that a flow for the market, or think there is a risk for the markets to go down further from those levels if global things gets a little murkier and the China numbers starts to turn a little negative?
I don't see that happening for India.
You don't see more than 10% downside for India?
I don't think India is necessarily that correlated with China. There's a lot of growth within India itself, which is not necessarily dependent upon what's happening externally. So I don't see you going back to those levels.
Okay. Thank you very much, sir. Thank you very much for joining us on the show today. Thank you.
Thank you.